Hello everyone, George DeSantis here. I didn't do a video on the weekend, and so I thought, well, given the correction in the market that we saw today, especially today, but for some time now, for a couple of days, I thought I would do a short video here to sort of bring us up to date on what we are seeing in this market, what seems to be going on. So let's take a look. And before we do, let's bring up the disclaimer and take a look at it. Make sure you understand I'm not trying to give any particular person investment advice because I'm not an investment advisor. And I'm a psychologist and I do this for my own purposes to be guided by what I see going on. And anyone can take a look at the YouTube video and make of it what they will. So let's do like as we usually do. Take a look at the weekly chart of the S&P 500 first, and determine what we see here. First of all, I like to look at the moving averages that I use. This one is a 4 exponential moving average, a 9 exponential moving average. The green line is the 30 front weighted moving average, and this magenta line is a volume weighted average price with a 50 period. They're pretty much running alongside each other here. In any case, you could see that these averages are above each other from the shorter period to the longer period. So if insofar as moving averages go, we might conclude that we should conclude that the trend is still up. Um, we also have confirmation of the uptrend because the parabolic, this white dot, is still below the most recent bar. So that confirms the uptrend. On the negative side of things, looking at the price bars, etc., we have this bearish engulfing candle. In other words, the body of this bullish candle fits perfectly well into the body of this candle here. So we have this bearish engulfing candle, and that foretells a possible further decline. Okay, so we can, we could possibly see a further decline. Now, insofar I plotted, what I did was looked at the Fibonacci retracements from this low to this high, and we are sitting just above the 61.8% Fibonacci retracement, and that's sometimes called a golden rule and so on. So it may very well be that we find support here, and and that's all she wrote for the downtrend. And we're finding support at the 9 EMA as well. We might find support there, I should say, okay, because the future is not well known yet. Oh God. It's like I think Yogi Berra said, the future is the predictions are hard to make, especially about the future. So on the ADX indicator here, you can see that we still have an uptrend. I mean, histogram is trending up. The DI plus is above the DI minus, and so we still have an uptrend. Now on the histograms, though, you could see this divergence here as the S&P made this new high, right? MACD made this high. Well, this one here at least. When price pulled back, when the S&P pulled back in this area here, MACD became negative, and now. So this is what Alex would call breaking the back of the bulls. In other words, the bears are breaking the back of the bulls. Okay. Now, S&P rallies from there, makes this high, but when MACD rallies, it makes a much lower high than this high. So that's what we call a bearish divergence of MACD. And on the weekly chart, I've been saying this for weeks now, actually at least weeks, maybe months. We can't ignore these divergences, especially on the weekly chart. Well, today we got a big pullback of about, I think it was about 600 points on the Dow. Don't hold me to it, but I think it was around that. Now, if you look at MACD histogram, the 1939.9, we still don't have a sell signal on it, which is interesting, but we do have this divergence seemingly playing itself out. Okay, so that's a mixed picture, I would say. Now, on this indicator here, there's some of the rate of change indicator that I plot from Jerry Appel's book, one of his books. This is still in bullish territory. It's above the 4% line. Anyway, let's turn to the daily. Now we turn to the daily chart of the S&P 500. And of course, you see a different picture here because short term, right? Each bar is 1 day's data, not a week. And so now what we have here is we look at the moving averages first. And you can see that this 4 exponential moving average is basically crossing, it's crossing the 9. And you've heard me say many times before, perhaps, that one of my sell signals is when the 4 EMA crosses below the 9, I usually begin to get concerned and look to sell, look to take that as a sell signal. So that's one of my sell signals that I use. The other ones you heard me describe. The other main one is if I buy a stock and it drops more than 6%, I sell it, no questions asked. Especially if I buy it now and it's dropped 6%, I probably made a mistake. I don't want to take more than a 6% loss. Sell it. I could always buy it again if it looks good to me again. But that's an error, and we're going to have losers whenever we trade. We just want to have more losers and more winners. That's a Freudian slip, George. More winners than losers, and when we have winners, we want bigger ones than the losers, right? So that's how we make money. But the 4 crossed below the 9, and I think that was my signal to take some profits and some losses. Thank God the losses were much smaller than the profits, so that's fine. That's fine. And so I did some selling today. I even sold Tesla for a nice gain because I had a big position and I didn't want to hold it through earnings, and I didn't want to get involved with covered calls and collars and all that. So I know I could do that, but I'm sticking with my game. A good friend of mine said to me once, play your game, not somebody else's game. And I think that's good advice. This is my experience. So now we have the 4 crossing below the 9. We could go lower, although you see we might be finding support here at this 50 volume weighted average price line moving average here, right? So I hope so. I hope we find support here. We also notice that we are at the 618 Fibonacci retracement, and very often we find support there. The other thing we could look at is this. If you go back in time, this volume weighted average price line finds support here, right here, finds support here. Price it rejected. Traders rejected this price. Find support here again. Hey, maybe we'll do the same thing here. Let's hope. Hope is it's a good thing to have. It's not a strategy, but it's a good thing to have. All right, so it looks like if we might find support, and on the other hand, we have a conflict here. We could go lower. We have competing bits of evidence. We do have the parabolic above the most recent bar. The question then becomes, how low do we go? I don't know that we're going to go much lower, given the fact that we saw the weekly chart still looks pretty bullish. So I don't know that we're going to go much lower. We might have to consolidate for a while here. I really don't think so. And I'm loaded up with cash now, so I could buy whatever seems interesting again. Now let's go down to the ADX. The ADX turned bearish. The red line DI minus crossed above the DI plus, and that is the first time that it's done that. If we go back in time, you could see that that's the first time it's done that since November here, when we had a major, somewhat of a pullback, a retracement here. So it's now bearish again as it did here, right? Giving us a bearish signal. So all of this tells us we could go lower. We have to wait and see. Now, this bearish divergence of MACD on the daily chart, we also had a bearish divergence, is now showing us a bearish bar, histogram, a bar on MACD histogram 1226.9, and we're also getting a sell signal on the one that we take sell signals from. We also have the sum of the rate of change indicator breaking below 4% and doing so in a convincing manner because we had this big bearish bar here. So it's a sort of a wait and see game right now. We are hoping, and it's quite possible, to find some support at the 618 level, which is right here, Fibonacci retracement. And we have this very interesting volume weighted average price line that it seemed to have found support at a number of other junctures, right here, here, here. So we'll see what happens on those on the S&P. I thought I would take a look at the NASDAQ, the QQQ, okay? So here's a daily chart. The weekly chart looks very similar to the S&P, pretty close. Now on the daily chart, I'm seeing some differences here. We do have the 4 above the 9, 9 above 30, so that the 4 is not really crossing below the 9 yet on the NASDAQ. And before I forget, I've heard it said over the years that the Nasdaq tends to lead the rest of the market. As the as the Nasdaq goes, so goes the rest of the market. Well, if that's the case, Nasdaq looks a little more positive here. Why? Because I'll point out the positive things first. First, because this is the first time that the Nasdaq is closing between the 9 and the 30. You see the 9 EMA and the 30 weighted moving average, and seem to be finding support at the 30 moving average right here, 30 weighted moving average, as it did here, right? And as it seemed to have done here, or here, and here, and here. So this is what I refer to as a buy zone, because I've learned this from a futures trader. And the first, anytime the Nasdaq, anytime the security trades closes between the 9 and the 30, it's likely to go higher from here. So that's encouraging. The other thing to notice is parabolic is certainly above the most recent bar. So if I sound too bullish, this slaps me in the face, upside the head, to keep me honest. Okay, I'm just telling you what I'm seeing. We're closing in the buy zone. We could very well go higher. We'll see. There's a big tug of war going on here now. Now, if we go down to the ADX on the daily chart of the NASDAQ, you can see that the DI plus was bullish here. It never really crossed, not yet, crossed below the DI minus. So technically, the ADX is still bullish, okay? And insofar as MACD is concerned, you can see that we don't have a sell signal on this as we did on the S&P. So, and when we go down to the sum of the rate of change indicator, it's just kissing the 4% line. It hasn't dropped below it. So if the gods are good to us, we might see some support here, and this market may not drop very much more from here. Okay, so I'm going to get ready to buy some stuff. And I'm talking like a true optimist here, right? And the other thing that I have been reading and noticing in the news, because I have nothing else to do. Even if I make a lot of money, I have nowhere to go. I can't spend it. So I'm convicted to stay here and take a look at charts all day long and drive myself crazy. No, not really. I love it. I love it. Otherwise, I won't do it. One of the things I've been reading is that earnings predictions are coming in pretty good. And if that's the case, then, maybe that's all she wrote for this downtrend. But I'm not going to bet on it. I'm going to let the market tell me if it's going lower before I take my hard-earned money and bet on anything here. Okay? So, folks, I think that's about it. I don't want to go any further. As far as individual stocks go, we can trade individual stocks if they look good, and if you get on shaking, you get all the greens, as we say, on the shaking charts. But other than that, I'm staying loose. So I hope this helps. I hope it ain't too negative, and I hope it ain't too Pollyannish either. So have a good weekend. I'll try and do this look at the market on the weekend this weekend. Okay, I promise to do that. Thank you for listening. Bye bye.